For all of Wall Street's optimism for a business-friendly environment under Trump 2.0, market conditions have proved much more difficult, especially for venture capital. Higher borrowing costs have put a stop to years of easy money, and fund managers are grappling with more cautious investors. Here to discuss further, Bradley Tusk, Tusk Venture Partners founder and CEO. Bradley, we want to get your take on the VC environment right now, given some of the pressure that we've seen from policy from the White House and also, of course, from the Federal Reserve. What are you seeing?
You know, look, VC has been effectively dead for the last 4 years. There's been no liquidity, both in terms of IPOs or M&A activity, and there was hope, especially in the fall, that that would change for two reasons. One, the Fed was cutting interest rates, which makes sort of alternative assets more attractive. And two, the idea was with Trump coming in, you would have more kind of pro-business regulation, more pro-business regulators, and that combination. But I think instead what we've seen is A, the Fed is saying, look, we may be done cutting rates, and B, just the federal government is so chaotic that I think the markets don't really know what to do about all of it. And so instead of there being kind of a clear glide path for IPOs and for M&A, it's just chaos.
How much of a chilling effect then do you expect from that?
A lot. I mean, effectively, you know, the chilling effect before was the result of the FTC kind of generally being so anti-M&A overall that it just sort of kept everything at bay. Right now, you might have better regulators from that perspective from the FTC, but when the operating system of governance is chaos at all times, that's not good for markets, right? And so I was hoping that we start seeing some real liquidity in Q1 or 2 of this year, and you know, right now I would be shocked if that happened.
Do you think we'll even see it in the second half of the year?
I don't know. I mean, maybe if Trump settles down a little bit, you know, my kind of hope, and this is possibly totally naive given who he is, but came in with this massive ball of energy, all the stuff he wanted to do, and then kind of once sort of that clears out, things start to normalize a little bit. So I would like to see that happen for lots of reasons. But, you know, with that said, he is comfortable in one particular mode. And I think, you know, for him, if anything ever does get too calm and quiet, he will come up with something to shake it up again.
How does that tie into what you think Elon Musk's end goal is? Because I've talked to some people this week who are concerned that all of the Doge cost cutting is in an effort to privatize some parts of the government that Musk can benefit from, and then others say that's a little bit conspiratorial. He's just trying to cut costs.
Yeah, I think if anything, you're being too generous. I think Elon's end goal is a lot like Trump's end goal, which is a lot like Kanye West's end goal, which is attention. The fact that we are talking about him right now is what he wants, and I'm sure they all prefer positive attention to negative attention, but they would vastly prefer negative attention to no attention at all. And so Elon is a really smart guy. He has done some tremendously impressive things like Tesla and SpaceX and Starlink. But I've also, keep in mind, I've been a tech investor for a long time, but I also worked in government for 15 years at every level of government. And A, he has no idea what he's talking about or what he's doing. And B, and I know people watching this show, because they're all private sector people, won't want to hear this, but running a government at a really high level, like I was the deputy governor of Illinois for 4 years, is exponentially harder than running a company. So many more stakeholders, so many more points of view, so many more inputs and variables that one of the real problems that you see all the time out of Silicon Valley is people don't know what they don't know. They think that just because they went to Stanford or they were a Y Combinator or they made all this money, they're a genius at everything. Like, no, you're a genius at raising tech funding startup, you know, tech start funding or engineering or whatever it might be. But the fact that you figure out how to get people their smoothies, you know, a minute faster doesn't make you equipped to figure out what the budget should be for the U.S. Department of Defense.
So what does that then tell us just about how effective or ineffective he potentially is going to be then within this role?
Yeah, I mean, I think more ineffective than effective because, look, you know, as the previous guest said, there's plenty of waste and bloat in federal government, and I think the notion that we couldn't make it smaller and more effective is great, but what he's doing seems to be so without regard to any thought that, you know, there have been more plane accidents in the last couple of months than at any time in recent years, and I'm not directly blaming his, you know, cuts and pending cuts to the FAA, but clearly this is the wrong time to have fewer air traffic controllers, right? And there are just so many different, cutting the DoD budget at a time where there's going to be a peacekeeping force needed of some kind in Ukraine, some kind in Gaza. The world is a volatile place. I thought Republicans were supposed to be for having a strong military, and instead it seems to be the opposite. So, you know, if they were, like with tariffs, for example, there's at least some measure of thoughtfulness around it, right? Like what Trump has said is, We want to sort of study everything, see where the U.S. is being treated unfairly, where other countries are taking advantage of us, and then sort of act accordingly. That makes sense to me, right? Our companies shouldn't be treated unfairly. But with Elon, it's all move fast and break things. And look, when it's your private company with your money and your investors' money, and you want to do that, that's kind of your business. But when it's 330 million Americans and their lives, that's another story. And that's before we get to the government shutdown in a couple of weeks.
Well, I want to switch gears a little bit and talk to you about DeepSeek before we let you go. How has the introduction of this AI that was seemingly trained for a lot less money than the AI players in the US, how has that changed how you are advising?
So it comes down to one question that we just don't know the answer to yet, which is, so DeepSeek says, look, we built this inference model because we had to deal with US trade restrictions, and the inference model turns out is vastly better because it's at least 90% as effective with a fraction of the compute and energy cost. OpenAI says, no, you trained it on our model, which required all of that compute and energy cost. So ultimately, everything you're saying is totally false. If DeepSeek is right, overall for AI as a sector, that's really good, right? Because it reduces the costs meaningfully, and it means that for the ability of companies to use AI, they're not sort of hostage to a handful of companies like OpenAI or Anthropic or whoever else, and B, the costs that they'll have to spend to get it are a lot lower because people gravitate to the lowest cost technology that can do the job. Now look, there is a real fundamental problem that all of the US AI companies seem to fully believe that the only way to do AI was with hundreds of billions of dollars, if not trillions, in compute power and new energy sources. That's what Stargate was all about, and that might all turn out to not be true. And so what may be to the benefit of AI as a whole and consumers as a whole may be to the detriment of the major US AI companies because they may have thoroughly miscalculated.
Bradley, real quick, we only have about 30 seconds here, but were you then a bit surprised, just given some of the rhetoric that we did hear from some of the larger cap big tech CEOs on their earnings call, kind of doubling down on those spending plans?
I think the problem is, one, there wasn't enough time for them to sort of pivot to a new reality. And so, if investors on the earnings calls heard a lack of confidence, that would have shaken the share price. And I think to a certain extent, our CEOs are so overly held hostage by just what a handful of analysts sort of interpret on a call every quarter. But two, we don't know. So maybe Sam Altman is right. Maybe DeepSeek ultimately cheated all the way through. And you do need that level of compute and energy to do AI right now, in which case they're right.
All right, Bradley Tusk, always great to have you.
Yeah, thank you for having me. I appreciate it.